Hey guys, we've got an absolute banger for you today. Tobi Pearce, part 2, who sold his business for $400 million at 28 years old and is well underway to have a business valuation of $1 billion for his next venture. This episode is going to be everything about entrepreneurship, scalability, the disciplines that get you from 0 to 400 million and beyond. We're going to unpack not only how to grow your business, but then how to invest in the next ventures and how Tobi thinks and the frameworks associated with that. So you're going to love this one, guys. Enjoy the episode and we'll speak to you soon. Welcome back to another Both Sides podcast. Tobi Pearce, round 2. Thank you, mate, for joining us. I'm really excited because, mate, you're somebody who is not just a successful entrepreneur, but somebody that's achieved huge amounts of accomplishments at such a young age. And mate, to sell your business at 28 for 400 million and then to go and build something now, which we're talking about, which pretty much has $1 billion valuation, is quite extraordinary, especially in the Australian marketplace. So thank you for coming back on, man. And Kevin and my, I guess, main goal today is to just unpack as much as we can from a business perspective, and then also a little bit about how that can then translate to improving the quality of our life. So Thanks for coming back on, man.
Thanks for having me, guys.
You want to? Okay, so my first question for you, Tobe, is like, what do you think's been the biggest change in your mindset since our last podcast from a business perspective? Like, what have you learnt between the last 12 months, which you're like, I wish I'd known that 12 months ago?
Yeah, so I think for me, one of the new contexts that I play in is this world of investing, right? Which is fundamentally different to like running a business. Right, and so in some regards, yeah, I think to be a half-decent investor, you need to have some understanding of the way businesses run, but understanding the way a business runs has really no relation to whether or not you know how to invest. And so I think for me, it's been, frankly, an incredibly humbling experience, kind of going through the different ways of thinking. And I think also just, trying to answer these really seemingly simple, but like philosophical questions, like, is this a good business? You're like, well, what makes a good business? Like trying to actually think through those things. Because when you're in an organization, the answer to those questions are very different to, if you're going to buy the organization. Yeah, and so for me, that's been a really kind of fascinating learning journey. And there's a lot of things I wish I understood about that, a year plus ago. Because the more you learn about that, the more you realize that a big advantage in the game is just getting in early, as in like, kind of investing your money early into good things and then letting it compound. But that's probably taken me a year or 2 years to kind of really understand what that looks like and like how to make that work. Yeah, I'm a white belt, if you will, at that so far. So I've got a lot of learning to go still.
When you're assessing, because we're in the stage now of our journey with both sides, getting into sort of an equity stake in different verticals, when you're assessing these next opportunities, are you coming in with just capital, or are you also seeing how can you impose some of your wisdom, knowledge into the business? Like, how are you assessing how you can optimize your leverage point in a transaction?
Yeah, sure. I think it depends a little bit on the asset class. So like for example, if we're looking at venture capital, investing in, or even kind of seed capital, like really early stage organizations. One, I think the check size for those deals is quite small. Like you're normally talking like, I don't know, 50 grand, maybe 150 grand. So they're quite small deals. Firstly, and then secondly, I think the use of like my time in those businesses doesn't always make sense either, because they're so embryonic. You don't even really know if it's a business yet. I would go so far as to say a lot of them aren't really businesses yet; they're ideas. So they're very kind of arm's length, quite often. I'm probably in about 25 or 30 of those, type businesses at the moment. And honestly, I might see a report like once a quarter. That's kind of about it. I'm really, investing in like the high quality founder and what I would believe to be a high quality kind of industry and opportunity, but that's about it. If you kind of slide up the spectrum though to more what you might call more private equity style investing. These are businesses at the low end that are already doing a couple of $1 million a year in profit. And I'm investing in those because I have high conviction that they have like, kind of long-term capacity to generate good free cash flow. And so I'm looking at those businesses tremendously different, to the way I would look at the first ones. Check size, at least a couple of $1 million at least. So the way I look through those is very, very different, and I will always have some formal involvement in those organizations because I believe that my capacity to add value there is quite meaningful. Yep. Whereas early on I can still add value, but it's quite like the probability of it actually being derived by value for me is much, much lower. Whereas with a business that's already kind of a going concern that makes profit and is predictable, the likelihood that I can add 10x value is much higher.
So like they may have a specific problem that you can solve and create a greater impact.
Yeah, correct. Yeah.
What are the common denominators that you have to consider when you're looking across all those businesses before you actually invest? And how long do you usually consider those businesses before you put your money towards it?
Yeah, so I mean, on the VC, style deals, these much smaller organizations, honestly, it's quite short. Yeah, it's like I might meet with the founder a couple of times if I'm directly involved with it. Do a bit of my own kind of market research. Who are the competitors? Kind of what's the idea? Like, how big is the market? And I guess generally speaking, if I think they're building a good product or in the direction of building a good product, the founder kind of has the right personality characteristics and attributes I'm after. And there's a reasonable sized market. That's kind of it. Like, there's not a lot more to it than that. And the reason I say that is because a lot of those organizations are so small and so early on in the journey. For you to have any more conviction than that, I think is borderline arrogance. Because a lot of these organizations, for example, like, a business like Slack, a company like Slack, I mean, that started out as a gaming business that failed and lost, like, I think it was $20 million of venture capital they lost. Then it became something great. But that worked because the founder was good. And so I think with these things, these businesses are so small, you can't really be super confident early on.
How do you make the decision when it might be like a completely new industry or niche within an industry, when there's no like metrics to go off?
Yeah, so I would probably look at it slightly differently. And to me, like, what are these people really doing? Are they building an entirely new industry, product or service that doesn't exist at all? That's like kind of the highest risk, in some regards. Or are they iterating? And if they're iterating, I probably wouldn't invest because I could go and buy a business that already works and makes money and I could iterate with that, right? So that's kind of a filter. Like, I wouldn't be looking at those organizations. I think the second thing is too, if they're doing something, if they're kind of really on the early stages, I'd definitely be looking at the way they approach the business model. And so this comes off the idea that most significant or like dramatic outsized returns in a venture, traditionally speaking, come from organizations that are, reinventing an entire space, or they're like, altering an industry's business model. So to give you an example of that, like if you look at Uber, part of the reason why Uber won was not just because they had a cool app and this, that, the other. It's because they fundamentally changed the model of transport. So they didn't just hire an employee or get them to buy a plate for a car and drive. They changed the entire value chain for that industry. And so if I was looking at an organization that was doing that, like that to me would be interesting if I believed or agreed with the logic. But I think like the important thing to acknowledge here is whilst all investing is a skill and venture investing is certainly a skill as well, and I'm absolutely not an expert at it, even when you look at the people who are kind of the best at this, the Andrews and Horowitz, Sequoia Capital, these sorts of companies, internationally, a lot of the time they'll very often tell you, like, whilst we have a method and kind of a general framework, some things you can't predict. That's part of the reason. So part of the reason why the return can be much higher is because the uncertainty and risk is significantly larger, and that's priced into the capital when it's deployed to the business.
Are you diversifying when investing in these new ventures by for example, focusing on businesses that have greater cash flow potential, potentially less risk, or than other ones where they can have greater leverage and compound effect? Could be penetrating a completely new sector.
Yeah.
Are you conscious of trying to diversify, or are you somebody that's like, I'm going to go really deep on one thing and make sure that's got the highest probability of success?
So transparently, pretty much the only reason that I do VC is to learn. So like that's an investment in development for me. And when I say that, obviously, like optimistically, I make some money back. Like that would be great too.
You're right. So kind of similar to the concept where you said, I'm going to snowboard and do jiu-jitsu because I want to fail fast.
Yeah. So like I'm a limited partner in a couple of venture funds, for example. Right now, at least half of those investments will kind of lose money or break even. And then just to be clear, that's kind of the nature of, that's part of the probabilistic game of venture investing. But I think for me, the amount that I've learned about this is the way these venture funds analyze deals, and this is their research, and this is the way they find deals, and this is the way they run their business. Like, to me, that's been incredibly valuable. So even if that's cost me $500,000, like the learning and development there, you can't really, it's a lot harder to just go and read a book about that, if that makes sense. And you can read all the books in the world, but you need to see it in practice is much more enlightening. Whereas if you kind of cross back to the other style things, looking at buying existing businesses that kind of work and operate that are already doing well, for me that's really all about like accumulation of free cash flow. That's kind of the goal. And I think a lot of the time people don't necessarily fully respect like the complexity of investing. At the end of the day, if it was really easy, then everyone would be Warren Buffett and would have destroyed the S&P, over 60 years. But unfortunately, that's not the case. And that doesn't mean that his method is the only method. There's lots of different ways to make money from investing. But I'm learning quite quickly. It's a lot more complicated than it looks.
When you getting offered a particular equity share, have you gone back and renegotiated for the same price or same money you're putting down for more equity? And if so, how did you do it?
Yeah. See, I have a slightly counterintuitive, I guess, perspective on some negotiation. And again, it depends what you're negotiating for. But I think in this particular case, equity, I think, to put it bluntly, I think if you're messing around and kind of pushing back and forth for 1 or 2% equity, you're doing business with the wrong person. Because I think at the end of the day, if you think about it from the person selling the equity, what's the value that they really get from that? It's well, if they need the money, then the money helps them do whatever it is they want to do. If they want your intelligence and experience and support, then that's the value they get. And they'll value that, and that should be quite easy to kind of, get to headline deal terms. But I think, and I see this a lot, especially probably a slightly different examples, like an employee, a manager and an employee debating over $1,000, in their salary bump or whatever. It's if the manager wins where they don't pay the $1,000 or $2,000, is it really a win? If that employee is then, kind of irritated, and has negative sentiment about the way that process was handled. And just to be clear, that's not a proxy for saying you should just kind of cop it in every negotiation, but it's more about, figuring out what really matters. And I think for me, the 1 or 2% more equity is less valuable than, control, for example. If I was doing a larger investment, I would say if I'm doing this investment, I'm doing it because I believe in it. If I believe in it, I need to make sure that these silly things don't happen. What control do I need, rather than do I want an extra 1 or 2% ownership in the business?
What if it's not 1 or 2% and it's a large jump because you believe you're going to bring in the lion's share of business into the business, business into that new business?
Yeah. I think in a scenario where the value contribution by the inbound investor is going to be significant, objectively significant, not the reason I say that is everyone's we'll bring heaps of value to your business. Everybody, and 99% of the time it never happens. And so, from my perspective, and just to be clear, this is part of the thing that derails a lot of these smaller, less sophisticated deals is, investor A goes, oh, I'm going to bring in all this value, and then the, person who owns the business at that point in time goes, oh, well, I don't agree with that value, or I don't believe in that value, or I don't value that value the same way you do. So you go oh, I'm going to bring you 300 clients, and you go, but I can get my own clients. So to you, it's worth 300 clients, but to them, it doesn't really matter. And this is the whole idea of, value exchanges that are occurring in investing. The simplest example is, I want to sell my shares to get some personal money. You have some money. We either do or don't agree on price, and the price determines if value is aligned. But I think when you start complicating things with I'll give you advisory time, and I'll give you leads, and we'll plug you into my network. A lot of the time, so to put it bluntly, about 85% of all strategic investments fail. You just don't hear about it because, when the media goes out about a large deal, company X has strategically acquired this business, 3 years later, they don't want to say, oh, we messed up the integration and the company actually failed and died, and here we are. That almost never happens. People don't want to talk about it. So a lot of the time those sorts of deals get derailed because knowing the person giving the value thinks it's worth more than what the person who is getting the value does. And so there's no alignment.
With your kind of framework and model now, Toby, what's kind of your North Star? I mean, you've done quite well in business from an operational perspective, being on the ground growing. Now you're transitioning to the VC, and you've obviously got the education side of things. What's your North Star at the moment?
Accumulation of free cash flow and return on equity. So they're just slightly different ways of saying return on investment, basically. Yeah.
If you were in our shoes, because I'll give you some context, we've got both sides of Enterprise now, which is our mother company.
Yeah.
And under that, we've got subsidiaries that are branded both sides, and other subsidiaries or investment stakes, equity shares in other businesses. What, from your perspective, would be the highest and best use of our time to grow the mother entity to the most profitable in terms of equity and cash flow?
What makes the most money for you at the moment?
Being in the real estate sector.
Yeah, so first thing is that.
Yeah.
And the reason I say that is that 99% of the time, growing your core business is going to be financially more viable, and like more value accretive in the short term than anything else, right? And so like majority of your effort and time should be going into effectively, if not significantly growing that, like automating that and making that cash flow predictable.
Yeah.
And then traditionally speaking, not always, but traditionally speaking, the next most obvious things are going to be ways of generating value that plug immediately into that ecosystem. So, there's this idea, it's probably a little bit hard without a whiteboard, but there's this a framework called the Ants-Off Growth Matrix, which basically is a 9-box matrix, which talks to the idea that all businesses effectively grow along the dimension of current markets expansion or market development, and current products and product expansion or new product development. And there's this kind of the extra dimension here is that the further that you go away from your core product and core market, the less likely it is that the idea works and the more expensive it is to do it. So, for example, like if you're a real estate business and then you decide I'm going to go build a supplement company, well, you don't have the skills, you don't have the experience, you don't have related networks, et cetera, et cetera. So it's much higher risk for you. Doesn't mean you can't do it. It's just much higher risk. So traditionally speaking, if you wanted to acutely accelerate the value that you're generating, you want to be finding things that like immediately kind of border what you're doing with your current skill set, because otherwise you have like competency risk, being like you might be able to get lots of deals done and that's great, that's really good for you, but if you're getting deals done that you can't actually add a lot of value to, then
you got less control.
Correct. And also too, I think like context, and so I'm not saying like I would never ever say like don't do something because you don't know anything about it, otherwise how would you learn? That's not the message here. But I think if your goal was to your point, like compound as rapidly as possible, it's like, well, that requires substantial discipline and discipline to stay in the lane of things that you know and or you believe you can win.
Because like for us, I believe our highest leverage activity is doing things like this where we can create opportunities for deal flow, we can meet and network with the top 1%,
Sure.
and that naturally creates opportunity. But we've also got our core revenue generating businesses.
Yep.
Would you, from your perspective, having built something like Sweat, focus, what would you see as our highest leverage activity? Is it to still be building the top of funnel, or is it to be a bit more CEO minded in the operational side of things, or both?
Yeah, I mean, I think it's ratios. I think being operational is going to make you the most money in the short to mid term. Like just as an example, like if you're an organization that like has a rent roll, like so your property managers, for example, it's like the highest return activity is probably going to be expanding the size of the rent roll in the short term, and whether that's through acquisition or general expansion by acquiring more clients or whatever, but that's probably going to be the highest returning activity. In parallel to that, if you're like, oh, we're going to go build a property management SaaS tool or whatever, it's like that's not a bad idea, but it also has significant skill gaps, presumably, assuming that neither of you are kind of engineers, right? But you have significant context in that area, so like that would still be a better idea than going and setting up a supplement company per se.
Yeah. Well, and what would if we were to, let's say that skill gap's defined, if we filled that skill gap with partnering with somebody, for example, yourself, let's say you were an expert in one venture and we was to say, hey, Toby, we'd like to partner with you in progressing that. We can leverage our brand and what we've created and our network. What's your thoughts on that?
Yeah, I mean, I think like skill arbitrage is a good idea. If you can find ways to do deals with people where they plug your competency gaps or vice versa, I think that's a good thing for sure. But I think the one like overarching and kind of very painful reality that needs to be accepted is that like starting anything from scratch is inherently incredibly high risk. And that does not at all mean don't do it. It's more so just kind of accepting the reality that out of every 10,000 odd startups, like most of them will be dead in a couple of years. Most of them will never make any money at all. And a huge portion of them will never even get to market. That's another thing that people don't talk about, like the amount of investment decks. I must receive a couple of hundred investment decks a year, specifically where those businesses never even launch. So it's a pretty deck and a prototype, but then they never launch. It's just an idea. And this is kind of coming back to what I was getting at before, that like polarity between investing in businesses that already generate cash flow versus ones that are kind of like right down at the embryonic end, if you will. You have to have a different mindset and a different framework for each of those two type of deals, because one end is just so far away from the other end. You can't use the same mental models to make those decisions. And the simplest example is if you're buying a business that has cash flow, if you want to value that asset, traditionally speaking, you'd do a combination of discounted cash flow, like financial modeling exercise, and market comparisons. What have other similar businesses sold for? And you'd use that as insight to kind of calibrate what you think you can justify paying. But if you're looking at a new idea that's got its first 100 users in the last 6 months, what's not generating any cash flow?
Yeah, what are you gonna
it's a completely redundant way of valuing the asset, right? And so this is kind of comes back to that whole thing. You may as well look at this as like, basketball and golf in some regards. Like, yes, they're both sports, but like, one has a stick or a club, and the other one has a much, much, much larger ball. One's played in a court, one's played in a field. So cool. They're still ball sports even, but they're still very, very different, ideas.
How do you make that? We touched on it before, but how do you actually make that decision successfully multiple times?
Well, you start with the acceptance of the fact that you won't make it successfully all the time. I think that's the first thing. And I think that, one thing that I see lacking in most founders and even business people in general, it's just discipline. And it's a very broad word in the context of business, but something as simple as if I'm going to do a deal, an investment deal, or if I'm going to run an experiment in a business, build a new product or whatever it may be, do a marketing campaign, there is significant discipline in just deciding what success looks like before you start, so that when you actually do start, then you can objectively reflect on this and go, this either kind of succeeded or failed, right? But you would be shocked to know that I would say more than 90% of organizations don't have success criteria for running an ad or doing a campaign or launching a product, let alone doing business deals, starting a new venture fund or, buying companies, right? And it's these sorts of boring layers, or what a lot of people would call boring layers. It's these sorts of boring layers of discipline that actually generate value and make people wealthy. It's not the sexy, cool, fun stuff that makes people money.
Yeah, like they say, what gets measured gets managed, right?
100%. And even when you look at most organizations that are huge now, back in the early days when they were initially starting out, they had an intense focus on core product. But people don't want to build core product; they want to build fancy shit. But that's not actually what makes money. What makes money is the businesses core operations and core product and core marketing channels are generally speaking what makes the majority of the money. But people, that's less exciting. It's really, and this is something I think we might have spoken about this last time. It becomes progressively more boring the better you get at something. But if you want to generate extreme results, you have to be extremely good, presumably. But to get extremely good is extremely boring. And so a lot of people don't have the resilience, patience, or discipline to actually get really good at things. And that's not I don't say that disrespectfully. That's just a matter of statistics. You look at the amount of people that participate in any given activity, the vast majority of them are not very good at it. Yeah.
You touched on before that, you look at the founder, we're making a decision on if you're going to invest in that company or not. What makes a good founder in your eyes? Is it just because they've had a successful business, or?
Well, no, because most founders are first-time founders, right? So I think, using the filter for that is not always accurate. And there's some pretty interesting research that, serial founders are not necessarily dramatically more successful, than first-time founders. And even if and so success being kind of make money, and then the size of the success doesn't always relate. So i.e. someone who's done it 2, 3, 4 times doesn't always do it bigger than someone who's a successful first-time founder. I think for me, when I'm looking to work with those people, and in some regard, this is even similar to filters I want to put through, people when I'm recruiting them to work as a part of my teams. Generally speaking, they have to be intelligent, reasonably intelligent. Number one. Number two, they have to have a really good energy. There's nothing worse than working with smart people that are really, kind of boring and bring you down. You want someone who's got good energy. And I think you need to work with, people who have incredibly high integrity. So someone you can kind of trust to not mess things around. And this is not my idea or my framework. This comes from kind of the Charlie Mungers and Warren Buffetts of the world. That intelligence, integrity, and energy piece. It's a very general way of looking at it. To be slightly more specific, I'm looking for people that have moderate openness, high awareness, high conscientiousness, high industriousness, these sorts of personality attributes. And that's because I want to work with people who have high autonomy. But to have high autonomy, and in high agency in some regards, you kind of have to be smart, you have to be open, you have to be industrious, these sorts of personality traits. And you can normally you can normally figure this out with people like really early on, because I mean, you have to have some degree of industriousness to be a founder at all, because you had to go out on your own. But there's like levels to that stuff, right? You know, like, did you just kind of have an idea and go and build a product, or did you become like obsessed with the industry, you know, do research, et cetera, these sorts of things? That's normally the way I'm thinking about it. Yeah.
Have you ever looked at a pitch deck and gone, you know what, I can do that myself?
Like most of them.
What do you do in that situation where you've been presented with an opportunity where they come to you because you have the capacity to bring in the revenue, but they've got the capacity to execute?
Yeah, I mean,
more
often than not, ignore it. Yeah, because like, to be clear, like whether I can do something or not isn't actually like the important criteria. It's like, can this make money?
Yeah.
And to be clear as well, like if you think about this on a practical basis, all incredibly successful entrepreneurs and investors are ultimately trying to achieve one thing, and that's leverage, right? Yeah, it's like, how can I leverage me or scale me more? And so if my filter is, oh, could I do this myself? Well, then I'm not really leveraging, because it's still me, right? And I think also as well, like, yeah, if I could find 20 ideas that I could do, but I believe that all 20 of those founders could do those ideas really well, much smarter for me to deploy my capital and let them do it, unless I believe that I have some like incredibly unique, you know, advantage, right? And to be clear, like this is, you know, a lot of the organizations that I've been advising and some that I've invested in over recent time, you know, a lot of the time I have some unique advantage in a few things, but I'm able to kind of install that in the business quite quickly and then get back out, you know, and then let them, you know, run with that. Because yeah, at the end of the day, you know, I mean, I have, yeah, whatever, call it 50 or 60 hours of like decent quality work time a week, right? If I want to get the maximum leverage, I have to deploy that to the highest returning activities. And very often that's, as strange as that may sound, very often that's not going to be starting businesses. I know that sounds crazy, like in the context of the way that majority of the world talks about this idea, that is mostly wrong. You know, if you want to achieve maximum leverage, like constantly like randomly throwing darts at a board isn't actually the best way of playing the game.
Let's bring it back to what you just said in terms of like, if you've got that unique, you know, point of difference. I know how long's a piece of string for this answer, but generally speaking, how much equity share would you ask for?
See, I wouldn't even think about it that way. So like if if basically for me, it's like I'm either doing a controlling deal or not. You know, so if it's a controlling deal, like I want a meaningful stake. It doesn't always need to be controlling from a shareholder perspective, but you can either have other kind of provisions and rights in for that. Yeah, but from my perspective, like I never want to be too over-concentrated, you know, in an asset if I'm deploying like my liquid cash. So, you know, normally like I don't want a deal necessarily to be kind of more than 10 or 15%, generally speaking, of my like available free cash at that time. But I think like, yeah, in terms of the percentage of ownership or whatever, as blunt as this may be, like I've often found that that's kind of like the wrong consideration, and those sorts of considerations are often made by people that they're not really considering, you know, like, will this business be successful or not, and can I make a return on my money? So like just as an example, would you rather have 10% of something that kind of never goes on to do anything, or own 1% of something that ends up giving you 50 times your money? Like, you know, what matters? And as well, and you know, part of the idea behind this as well is that when equity is in incredibly high demand, so like a company is raising money and everybody wants into it, it's like, well, you'll have worse terms. Like you'll pay more for that. You won't care about it because your conviction will be higher. And so to me, it's less about the percentage of ownership and it's more about the percentage of return. Like what's the likelihood that I get a really high return here?
With your mindset on that, Toby, where it's like, what's my percentage on return? Do you ever get opportunities where you're not actually putting in capital, but they're giving you an equity position because of your ability to connect dots?
Yeah, I get offered that quite a lot.
So how would you assess that situation? Like for us, we've been getting that more and more frequently where it's like, hey, we've got this idea. We'd love to gift you a percentage of equity for your ability to help this venture excel.
Yeah.
Obviously your returns then become infinite because your cash deployed is zero, but your potential other resources like time, network, and capability gets deployed. How are you assessing those situations?
What's the thing that you've been given in life that you were given for free that you've protected at all costs?
Time?
No. What's something that someone has actually given you free in your life that you've put a huge amount of effort into protecting?
Nothing.
Yeah. And so like, I'm not saying that those deals don't exist either.
Yeah.
I'm just saying it's like if someone's coming around giving me equity for nothing, to be honest, I'd be wondering, well, why are you trying to give it to me?
Yeah.
Because if your equity was incredibly valuable, you'd be asking for something from me, and then we'd end up right back to, well, what's my unique advantage that I can contribute to you? And to be clear, like, it sounds like I have these conversations quite often with people, and a lot of the time, then they kind of go, oh, like, so you reject pretty much everything, and I'm like, yeah, because most deals are not worth doing. Yeah, like just as a really simple example, even businesses that currently, so let's like rule out high risk, like innovative tech, for example. Let's just do cafes. Like what percentage of cafes die every 3 years?
A lot.
Like the vast majority of them, right? And so if you were going to invest in cafes, you'd still theoretically have to reject the majority of cafes available for purchase, right? And so I think, if you find yourself, and for people like you guys, if you're looking at all these deals and you find yourself getting excited by all the deals, I'd immediately stop doing deals and immediately start studying, because it's clearly something that I'm not understanding in this process of, I think everything is cool and sexy. And just to be clear, I think this is a great example of like one of the fundamental flaws of most people that invest. They get excited. Like if you're getting excited about something, you got to check yourself real fast, right? Because there's no point, like you can't get excited in anticipation of making money. Get excited when you've made the money. And there's the amount of people that like say, like, oh, I'm going to sell my company for $1 squillion. It's going to be the greatest thing ever, and I'll be this awesome like entrepreneur. And I'm like, yeah, cool. I'm like, celebrate when the money's in the bank, and not even money. All the money is in the bank. Yeah, because again, that's another thing people don't understand, that most deals that get done, the minority of the money actually ends up in the bank, and the minority of the money ends up actually being received. But a lot of people don't. Again, they don't want to talk about that. They don't want to acknowledge that that's a real aspect of the game. So I think for you guys, if you're finding yourselves get these opportunities, if someone's giving you something for nothing, I'd probably have an allergic reaction to that. And if you feel yourselves getting like really excited about something, I'd probably be checking myself as well. And
advice.
One way of thinking about this is too, and I'm potentially bordering on having another one of my Tobi moments where I upset a lot of people. But if you find yourself getting really excited about something, a really simple question to ask yourself is, well, how many times have I done this really well? Right, so let's just say you have a deal on the table right now, and you're like, oh, dude, this is going to be epic. We're going to make all this money. I'm like, okay, well, how many deals have you made money from? How many deals have you 10 extra money from so far? Genuine question, how many?
0.
Right, so in the context of that, and that's not meant to be rude, it's just in the context of that, well, what are you getting excited about? You're getting excited about something that you've never successfully done, so therefore it's hard for you to get excited about something that you can't fully understand. It doesn't mean don't get excited about anything. That's not the advice here. But it's like if you find yourself getting almost like irrationally like revved about something, it's good just to kind of pull yourself back and go, cool, this could be exciting, but what are the merit? Like what's the merit here? What is the data that actually suggests this to be true? Try to move your emotion away from it, because most people in my experience and that I've met in my career who get excited about things are also the people who get really worried about things. And if you're letting your emotions kind of dictate the way you make decisions, well, I mean, it's easy to understand how that's going to end.
When you say check yourself, how do you do that?
Well, I would ask myself things like, what data am I relying on to let myself get excited? And is that data reliable? Because every founder in the world is excited about their journey and about their story, and myself included.
What if the data is there and it looks good?
Well, then the question I'd ask myself is, how many times have I reliably predicted the future based off of data like this?
And if it's 0, what do you do?
Well, then I would immediately get less excited, and I would do my absolute best to validate or verify the merit in my reasoning, and then I would back myself to make a decision. But then this brings us right back to the thing I said before. Do you have the discipline to set your success criteria at the start and then objectively measure yourself against it when things happen? Because you can't learn without experimenting, and that might mean you need to lose some money or lose some time or whatever. That's fine. But if you're not honest about that in reflection, so you get 6 months or 12 months in the future and you're like, oh shit, that company's dead. Okay, well, it's dead because, it's dead, yes, but I'm here when it's dead because I made a commitment earlier on. What was the insight that I lacked then? Or what was the insight I had then that maybe I misinterpreted or misread? And so just to be clear, inside businesses is like much easier than investing. It's like inside business, you go, oh, we're going to launch this new flavor or this new color or this new product or whatever it is. And that kind of like does or doesn't flop early on. You can kind of, so if you'll just look at the e-commerce business model, because it's a somewhat popular and reasonably simple way to look at it. Well, we have these products at the moment. I've deployed this new product. Did we get good traffic to those products? Was the view to conversion rate good? Do the ads perform good comparatively to the other things? It's really easy to kind of like measure that experiment, if you will. And it's also very acute. Maybe it took you 3 to 6 months to develop that, another 6 months to get it in the warehouse and sell it, and away you go. So it's a 12-month gig. But with investing in kind of a business from day dot, like the validation, if you will, that might take 3 years. And so this is part of the reason why, again, like investing is a very long game. Like most venture investment timelines are about 5 to 7 years. And just to be clear, that's 5 to 7 years for winning and failing. So you might not have properly understood that for many years in the future. And just to be clear, I still do this now. There's lots of things I invest in that are terrible decisions, but they're good learnings.
What's been your biggest feedback loop or learning from an investment decision you've made?
I would suggest the interactions with the founders, and so this is actually probably a good kind of thread to pull on that there. Like when things are going wrong, how honest are the founders? When things are going wrong, how realistic and kind of practical are the founders? Because the issue is not, like especially in early stage businesses, the issue is not things going wrong. Many things are going to go wrong. You're going to make lots of bets, build features that people don't give a crap about, et cetera, et cetera. It's more how they respond to that. So do they respond to that with curiosity? Like, do they respond to that with openness? Do they respond to that with like a drive to win, like a resistance to failure? Great, that's awesome. Or do they respond to that with kind of justification and avoidance and these sorts of things? Like that's not so good, because that to me represents like, that's kind of the foundation, if you will. Like the psychology of the founder is kind of the foundation of the organization in some regards. So the more honest and meritocratic they are, the more honest and meritocratic the team and the organization will be, the more likely they are to create honest feedback loops to learn from and iterate. But the more dishonest and avoidant they are, the more dishonest and avoidant the team will likely be. And then therefore, regardless of if it's a good product at the right time in a good industry, it's less likely to do well. And again, someone else is building the same thing you are, right? There's lots of people building the same thing you are. And so if you're invested in the one that has the wrong founder, even if they started in a better position, they're less likely to actually win in the long term.
Because like you've said before, there's so much, it can start off as a gaming app that turns into Slack.
And one of the businesses, like we were talking about it before, the driver education company that I'm building at the moment, that started off as a learning management system for personal trainers.
Wow.
Yeah, and now it's a marketplace for driver education, right? So, and to be clear, like that was my 16th business I started or something, at that point in time in my career. And it's like, and if I can do that many times over and still be very, very wrong about it, but then somehow come out the other side with a completely different business, well, it happens, right? But it happens when the founders are open to that change.
And
right?
like is that discipline and commitment to evolving through the process.
Absolutely, yeah.
So you said before, maybe try to stick to the same lane or same verticals within that industry. You're going completely different things. First you're selling pianos, and then you're doing sweat, now you're doing driving. How come you decided to do that and not stay within similar verticals that you were successful in?
Yeah, so for me, earlier in my career, anything was the right vertical because I had no experience, right? And just to be clear, I wouldn't have consciously known that at the time. Like this is now, as I reflect back on myself, I can see that. But now, later in my career, I can't express enough like how many things I reject, and I'm not rejecting them because they're bad. It's just because I'm like I don't know this enough, or I don't understand this enough. Like for example, I have lots of friends who have made a huge amount of money on crypto, right? I think I've got about $5,000 in ETH, right? Like, and that's not because I don't believe money can be made there, but it's when I look at it, I'm like, there's certain things that I just can't get my head around. I'm like, I can't understand that. Doesn't mean that it's wrong. I just can't understand it. So I won't do that, right? Like even with certain AI things, like I'm a massive adopter of a huge amount of AI tools, and I'm actually pretty handy, with like computer science and engineering, but there's certain aspects of like that area of AI that I'm like, I haven't like fully understood. So I'm probably not gonna, go bet the house, on that at this point in time. But when you look at things like, kind of marketplace businesses, kind of like building product, SaaS, direct consumer content, e-com, like they're things that I consider myself to have incredibly deep expertise on. So when I look at those sorts of things, I can come to conclusions quite quickly, and I'm like, I back myself, to make those decisions and make those investments quite comfortably. So, like when you run a family office or a small kind of investment fund, everyone wants some of the money, and so you get these investment decks all the time, right? Like I get things for mining gold, like investing in kind of like gas production in Europe, like all of these sorts of things, and I'm like, they're probably good business opportunities too, but it's so far away from my competence that I'm like, oh, like I'm probably not really in a position to, be trying to like educate myself, yet on those things and or making bets.
So yeah, just kind of like staying in your sphere of excellence.
Trying to, yeah. But also, I think like honestly reflecting, on this happened, this is like a real time kind of perpetual thing. Like actually trying to continue to figure out, well, what actually is that? Like, what am I actually good at? What do I actually know and not know? And I think that's like a perpetual exercise. Even recently, I consider myself to be like somewhat decent at finance, right? Like I believe I have some pretty decent financial understanding and financial analysis capability. Yeah, and I start, reading a couple of books on like, like value investing and different approaches to valuation and different approaches to like determining, return on equity for certain investments, right? And like that's like one, simple, kind of idea. But doing that for like small private businesses and then doing that for public stocks is like two completely different ideas. And as an exercise for myself, I was like, oh, let's try to do this with like a public company. And I started going through it. I'm like, oh, okay. There's actually a lot of things I don't know here. Oh shit, this is actually pretty humbling, And so I think like you do have to kind of constantly push those boundaries to figure out like where your knowledge actually is.
Yeah.
But then when you find those kind of edges, that's when you figure out kind of intuitively like, oh, well, do I really want to push this? Like, am I super interested here? Exactly. And if yes, oh, cool, let's go deep here. Or if you're a bit like, oh, no, that's a bit, too far for me, I'll kind of come back to my lane. And I think like, the unfortunate part about a lot of these decisions is that like giving people advice is really hard because it's not binary. It's not like, oh, if you're good at this, do this. Like it's not that simple.
And it's like, well, then what?
Yeah, exactly. Yeah. And so you have to be structured and disciplined enough to stay in your own lane, but then not so, fear mongering that you never ever go outside it. Because then how do you ever kind of have serendipitous discovery oriented experiences, right? And so you just got to find your way. Yeah.
Let's bring it back to, because you've done a lot of consulting with many founders, entrepreneurs, and have probably a really good bird's eye view of what traits, habits, routines, mindsets formulate successful versus potentially some that are still learning.
Yep.
What would, and it's hard to kind of give a general blueprint, but what would your assessments be from the outside looking in? Like, where are we falling short? What could we do to improve? What's kind of like, not the blueprint, but the secret sauce in the common verticals of success? Yeah,
so maybe if we let's like narrow the scope to, businesses that are already kind of doing $10+ million a year in revenue, because that's a huge portion of, the Australian business community. And let's assume that they're doing kind of, somewhere between $1 and $2 million profit a year. If you're doing any more than that, that's great, for a business of that size. What are the consistent, I guess, themes and patterns that present themselves, whether it be kind of e-commerce, services, tech, whatever it may be? Honestly, they're quite consistent. So firstly, most people lack deep financial acumen, right? And so given that every decision in business is an investment decision, how do you rationalize investment decisions if you don't have good financial acumen? That's a huge one, right? And this often presents itself in terms of like, you've got too many employees, or your office is too big, or you're spending money in a poor way. You've got these kind of tools that you don't use, et cetera, et cetera. It's just kind of wasted money, unproductive money, right? So that's probably the first thing. I think the second thing is that off the back of that, people traditionally don't have, like they don't have very good people management and business management skills. They're not very organized. They're not very structured in that regard. And given that your employees will make you more money than you ever will, it's an interesting idea that most managers and business, like founders or business owners, don't really invest any time in developing that people management skill. And I think the third thing is then that most people they stray away from their core business, so they don't focus on like the thing that actually makes them money. And so like, and just to be clear, I would argue that those three things are a little bit like, in some regards, they're an overlapping Venn diagram, right? So if you have good financial acumen, you'll make better people management decisions because you'll be cognizant of the fact that those people are there to generate you a result, right? Like if you have better financial acumen, you have a better focus on your core business because you understand that your core business makes you the most money, and so these things kind of, they overlap in some regards, but they are quite complicated skills to generate for founders for a variety of very practical reasons. So like, where do most people learn management? Well, they learn it from their manager. Well, if you're the founder, who's your manager? You don't have one, right? And so like, oh, we'll go read a book, this, that, the other. Well, most books are pretty average, firstly. And secondly, they're not necessarily always in the right context, and So I was thinking about this idea actually on the drive here this morning. If you're building a team and all of your team are giving you negative feedback, does that mean that you're wrong, or does it mean that they're wrong? Right. So like just as a really simple idea. So you might be a founder trying to drive incredibly high standards, and then everyone's getting really upset with your standards. Is it likely that you just have a small group of people that have very low standards, or is it that your standard is too high to achieve? Like, how do you answer that question as a first-time founder? You have low context, low experience. And so a lot of these things are unfortunately really hard for, like first-time founders or early-on founders to rationalize. But I do think that the consistent principles realistically are that people have low financial acumen, low kind of competency at people and business management, and they get massively distracted from their core business. And that's kind of, in my opinion, the root of all evil, or the root of all lost margin.
Yeah, you said before on another podcast that it doesn't matter how smart you are, if you can't motivate your staff, it just doesn't matter.
Yep.
How do you motivate your staff?
So one of my like overarching kind of first principles, with people management is the thing that your team members want more than anything is assistance in winning. They want to win, right? And so just as an example, people go like, oh, I want benefits, and I want a pay rise, and I want these things and whatever. And I'm not saying that that's untrue, but a lot of the time, those sorts of conversations and or frustrations or challenges come up when people feel like they're not winning, when people feel like they don't have autonomy, they don't have agency. And so like before kind of anything else, I always try to make sure that the people I work with are actually set up to win. And being set up to win means, well, you know what winning is. So you know what the things are that you're meant to achieve. You roughly know what the work is you have to do to achieve those things. You have kind of, generally speaking, the tools and resources that you need to do that work to achieve those things. And then you have someone to kind of support you with decisions that you otherwise need. And so traditionally speaking, if you have those things, people actually be quite good insofar as you've recruited an individual who can actually do the job and is competent, right? And again, this is that sort of like the example I was providing before about people being upset or whatever, at the standards. Do you really want to recruit people that constantly require you to like lift them up and like move them on, or do you want people who are industrious and conscientiousness and intrinsically motivated? And this is, again, part of the issue with people management. Like, it starts with recruiting the right team. So no matter how good you are at management, if you have the wrong team, it's really, really hard. And so, unfortunately, these things are not, in my experience, like not straightforward. And, so I know that the fundamental irony in this statement is, like a lot of people want to, like watch podcasts or like listen to a podcast and kind of go, oh, I heard this person who was super inspiring and I got these 3 really good quotes. It's like, okay, cool. And how many times did you use those quotes today?
Yeah.
How many problems do those quotes solve for you today? It's like, well, probably 0 or very close to it. Unfortunately, these ideas require, like a deep amount of, repetition and experimentation, and experience to actually get, good at things. And unfortunately, coming back to the piece I was saying before around discipline, not a lot of people actually have the discipline to do those things, kind of ad nauseum for years and years and years and years and years to get good at it. Like I would say, even for me, I think I've told this story a couple of times before, when I had sold Sweat and left there, I'd been running my own businesses for nearly 10 years at that point. And I leave the business and spend some time reflecting and reading, only to come to a conclusion. I'm like, oh, I'm so bad at people management. Like, I am terrible. Like, I was able to build a business and actually make some money, but I'm really bad at it. And then so I spent a lot of time trying to practice that and improve that skill. And then now in my career, I'm like, oh, I actually think that's one of my like strengths now. Like, I can really motivate people. I can really get them focused. I can really help them kind of elevate and win if they want to, and if they're capable of doing so. But a lot of these things, like, that took me 10 years to even get to that point of reflection. And maybe it took me longer, than some other people, but these things just take time.
When you talk about discipline, Tobi, I'm interested to learn your perspective, like your routine around it now.
Sure.
We hear people like Alex Hormoza, he starts his day with work, like get in, deep focus work, not around morning routine or anything like that. What's your disciplines around optimizing your efficiencies with that 50 to 60 hours of productive capacity you have in a week? How are you optimizing that to be disciplined?
Sure. Yeah, look, I probably tend to agree with Hormozy on that. I think the whole routines things are a bit overrated. Do I like a cold plunge every now and again because it's hard? Sure. Do I like some structure? Sure. But like generally speaking, you can wake up one day to the next and stuff just goes wrong in business. Like, things are unpredictable a lot of the time, especially when you're building. But I think in terms of, for me, like the discipline stuff and, trying to make myself, more effective, there's a couple of really basic ideas, and this is not an exhaustive list, but just a couple that come to mind. Yeah, so one thing I learned really early on in my career is that if a job is worth doing, it's worth doing well, right? And so like I remember, and I literally learned this sweeping a warehouse that stored pianos, right? So this is from the music shop. And so I see this guy, like my mentor and boss at the time, Michael Cleves, who still owns the business. We would be out there and kind of moving pianos around, unboxing things, sweeping things or whatever. And I was like 14, 15 years old at the time, lazy as, no idea. And I would cut corners all the time, and he'd just call me out on it constantly, be like, "Well, that's near the bin, but it's not in the bin." Yeah, and like, "Oh, you've like kind of swept most of this up, but not all of it, and then you just push the dust into the corner. Get a dustpan, pick it up, put it in the bin." Yeah, and so it's kind of in these small things that like they're small things, but they kind of 10x your results because it's this like mentality and kind of mental fortitude you build, over time. And so for me, I think the idea there is that, if a job's worth doing, it's worth doing well. And so that kind of presents itself in terms of like, well, if you're going to create a document for something, create a good document. If you're going to have a conversation with someone, be there and have a good conversation with someone. If you're going to make an investment at something, really make the investment or don't do it at all, right? And I think in a general sense, like that's a really simple idea, but it's something you can kind of say back to yourself all the time. And I do it to myself now, even when I'm feeling lazy, even at home. It's like, I've cooked dinner. I can clean tomorrow. No, let's just do it now, and like it's these sort of things like, how many hundreds or thousands of those things a week do you kind of let slide? And then how does that reinforce, kind of looseness, in the way that you work? So I think to me, just having a general pride in doing things well is just probably a really, really like underrated, but like overpowered idea. I think the second thing for me is, I think a lot of people almost want to like drum themselves into a system and a structure, but the real world doesn't really work that way. And so I was actually giving this advice to one of my senior management staff only last week. They're like, "Oh, I just don't know how I do all this work at once. Like, how do I keep up doing all this work?" I'm like, "Well, firstly, you start by not doing it all at once." I'm like, you do one particular aspect for like the next week or two, and you spend like 95% of your time on that to get it to the point that it's a really high standard, and then you can kind of delegate it and move on. But if you kind of try to do that 2 hours a week, every week for the next 6 months, you'll never get the same result. To do it 40 hours this week, get it done, then move on. And they're like, "Oh, but then these other things will fail." I'm like, "But you're currently telling me that they're failing, and you're worrying about they're failing." So this idea of being able to kind of flex up and flex down like really dramatically, in certain focus areas I found to be like critically important. And then I think, probably the third thing is this idea of lag. So I know I talk about this a lot with my executives, and this idea of like executive resilience. If you need to make a decision, you're probably better off making it now unless you're missing a piece of information that you need, right? And so like one of the best examples is with employees. If you have a low performing employee and we just assume that they're at a point where you kind of need to terminate them, I always ask people when that eventually happens. I'm like, "When did you first realize that person needed to go?" And they're like, "Oh, 6 months ago." I'm like, "Okay, and how much have you cost the business in 6 months?" And they're like, "Oh, well, they probably could have had someone better and would have made a few percent more money." I'm like, "Okay, cool. Now, what about the other stuff? How much shit attitude have you reinforced with the team by keeping that staff member? How much low standard work have you reinforced by keeping that staff member? How much like kind of cynicism and whatever, in the organization have you fostered, by keeping that employee?" And these are things that people don't think about. So the idea of lag, to me, it's a really hard thing to like quantify. But in my experience, it's a massive like multiplier for effectiveness. If you have a decision that you need to make, you should make it now, right now, unless you're missing a significant piece of information.
Do you do the same with investments?
Yep, that's what I said before all the time. So even when I get something, I'm like, "Oh, is this in my sphere of competence?" Nope. Like, am I lacking information potentially? If I go and get that, can I get that information quickly? No. Well, then it's a no. It's not worth the time. And again, like that sort of like conviction, and discipline, like does take time to build, and especially when it has to do with decisions like employees. Like firing people is not easy. It's not fun. It's not enjoyable. There is nothing about that process that I like at all. And transparently, early on in my career, I was very, very avoidant of that. I keep employees sometimes for a year or two longer, than I was meant to, only to get to the end and they would resign, angrily explode and this, that, the other. And then I'd be like, "Oh, thank God."
Yeah, the weight lift off your shoulders.
Yeah, but really that's a representation of my own kind of weakness, and me lacking competence and conviction to do so. I mean, late last year, I had to have a termination conversation with someone who was employee number 2, at a company that I founded, who had been there for I think nearly 6 years at the time, and the process ended like really well, and we still have like a great relationship. But yeah, I like sat in that conversation, for a couple of days, before I had to have that, like just reflecting, how am I going to do this? How do I feel about this? Blah, blah, blah. And I've often found in those sorts of scenarios, the best way to start the conversation is, hey, I really don't want to have this conversation. And just doing it. But again, that can be days or that can be months or years that you lag, that.
I can definitely relate to that. I know that the more I'm progressing, the more I'm having to have these harder conversations.
Yep.
But once you do them more and more, they actually become quite liberating.
100%. There's this huge degree of kind of relief, I think you get from it. And a lot of the time too, people delay these conversations because they think they're doing wrong by the person, but you can reposition that, in a way of saying like, hey, by me not having this conversation with you for another 6 months, like I'm going to get more upset. You're going to get more upset. This is going to become less enjoyable, for you. So rather than having this as some kind of like, snap bang conversation, it's like this is happening. How can I kind of support you to make this, the nicest possible can? And you can't always win these things. Sometimes people don't want to engage in that in a polite and respectful way. And that's unfortunate. And you also won't always get it right too, because sometimes your emotions may get in the way. But that doesn't change the fact that it needs to be done. Like these hard things still have to be done.
You said it prior, you need to get better at hiring, hire better. What are you asking in those interviews to make sure you are hiring right?
Yeah, sure. So,
because they can fake it.
Yeah. Well, so this is an interesting thing, right? I think for me, there's a couple of like several kind of key gates that I'm normally trying to get people through. I don't think experience is the be all and end all of things, but generally speaking, I'm kind of, people's resumes are screened. So they're kind of ruled out if they don't have some relevant or related experience. So that's the first part. The second part is the preliminary kind of interview process. I normally get people to do a capability assessment, and that will normally be, put together a presentation. You kind of answer me these 3 particular questions, and then present it to me. And so they'll go away and do that. And then I normally open the interviews by saying, cool, we're not doing presentations today. I've already read what you've created. Instead, I want to ask you questions about how you arrived at these conclusions. And so the purpose of that is to understand the way that someone thinks. Can they articulate their thoughts, right? Because normally interviews will go like, oh, tell me about a time that you did this thing. And everyone's got a story. And in my opinion, a resume is a journal. That's all it is. I was here at this company at this time and I did this thing. But that's not a representation of skill or competence. And so very often, we'll do this kind of competency assessments and ask them these questions because I'm trying to get them to explain to me, how did you actually arrive at that conclusion? So it's not just what was the conclusion, but how and why did you get there? And that's normally about half of the interview process. And then the other half of the interview process is then me trying to get them to convince me why they're not right for the business, right? And so like I'll say like, oh, hey, like, if you had to explain to me, why do you think you're not the right candidate? What would you say? If I had to say like, you've got the wrong skills, what are the wrong skills that you have that we don't need, or what are the skills that you don't have that we do need? And based off of kind of like our organizational values and the way that we've done, this process, what way of working do we have that you don't align to? And you will notice that all of those questions are like antithetical, as in they're all kind of in the reverse. It's not, why should you be here? It's like, why are you wrong for us? And part of the reason there's a very deliberate, kind of like tactical approach to that is, and it's like, if you ask someone why they should be here, they're much less honest, than when you ask them why they should not be here. And when you ask someone why they should not be here, you can immediately see it's like, are they reflective? Are they honest? And are they self-aware? And part of the practical insight there is that no one is, well, pretty much nobody is perfect for an organization. They don't have the perfect experience, the perfect knowledge, right? And so you want to get from them, it's like, oh yeah, I've kind of done these things, but I don't really have any experience doing this, but I'm confident I can figure it out. Like that's kind of really the ultimate response that you want. Someone who knows their bounds, but has conviction and confidence in their ability to figure things out.
Sounds like he'd give you more clarity in how you place them in the organization too.
100%. And also too, like just to be clear, it's also a great filter. If you say to someone like, hey, like, what do you think you don't have for this role? And they're like, oh, I've got everything. It's like, okay. Yeah. Like, because I would look at myself and be like, there's heaps of things I don't have, even for businesses that I'm involved with now. There's lots of skill and knowledge I don't have.
Mate, put me in the spelling competition. I'll get last place.
Yep.
But mate, one thing I want to kind of start to close off the conversation, just respecting everyone's time, is one of the big questions our audience loves to unpack is the concept of optimizing a routine. So I'm curious for yourself now, in your stage where you've achieved a lot, what would you prescribe to those that are aspiring? And I know that it's in reflection, memory can distort, and you're in a different position now to others, but what would you prescribe to somebody that's on the aspiring an optimized routine from wake up to kind of close? What's your kind of framework for a day?
And honestly, I can probably summarize that. If I was looking at someone and trying to help them, I could probably summarize the way I would do that in one sentence. And that's remove 50% of what you do and then remove the next 50% of that. And when I say that, I mean that genuinely. So it's like people are like, oh, I'm trying to like design my routine. I'm like, well, let's start by removing all the shit you don't have to do. And that's probably 50% of what they do. And then like with what's left over, then remove another 50% of that. And you'll get back to the things that you absolutely must have and do. And just do that. And this is like comes back to some of the stuff we've already spoken about, and you're kind of concentrating on things that you know, concentrating on core business, et cetera, et cetera. It's kind of the same thing. Do you really, like just as an example, it's like, do you really, let's use this personally, like, do you really need to watch like 2 hours of Netflix at night?
No.
And can you watch 0? Maybe that's too hard. Okay, well give yourself half an hour, right? When you kind of get up in the morning or whatever, like, do you need to kind of sit around and do your 40-step routine with 100 supplements and this out there? Like, probably not.
So when do you exercise? Before, after, or during work?
For me, it's pretty much always in the evening.
Yeah.
And that's a partly a practical thing. Just to be clear, I don't really care. I kind of train whenever. And when I'm traveling, I kind of train whenever I can get it in. But yeah, like for me, typically it's in the evening. 2 practical reasons are, one, I got a daughter, so like in the morning, there's kind of morning routine stuff, to kind of get done. And because I'm normally working until, kind of midnight or after midnight or whatever, I'm not really getting up, necessarily super early each day. And the second thing is a lot of my training is jiu-jitsu, so they're classes, and most of the classes are on in the evening. So traditionally, it's night time.
Last question for you. In terms of scaling both sides from what you know about us, or buyer's agent, selling agent, and both sides, podcast being the overarching thing, what we're pushing, how would you scale both sides?
Content side, volume, just more volume. Like, and that sounds like really simple, but more reps, more reviews, more iteration. I think at the end of the day, like that's sort of the direction that most of this is going in. And I think as well, like it's really hard for you to develop like nuanced skill and understanding not doing reps. So I think volume and asking yourself questions about everything. Like how do we make it better constantly? So that's probably the first thing. And I think as far as the so like if you're kind of property businesses, kind of buyer's agency and property management stuff. I mean, really what we've spoken about today is like I think an intense focus on what your core business is. So, like I actually think that like rent roll is really great businesses. Property management's actually really great businesses, provided that they're run well, of course. But with those sorts of organizations, they're actually really also prime candidates for like roll ups and like you're kind of buying other rent rolls and aggregating them. So if I was in your space and had that skill, I'd probably be looking at that. I have a few friends who've done that and been very successful. So to me, like that particular business model like really lends itself well to that.
Well, what have you seen the best podcasters? Because obviously you've been on a ton. What do the best podcasters do?
How do you define best? What makes
your
them the
favorite?
Best? I don't really have a favorite, to be honest. It depends on the individual thing. But I think like for you guys, so just to conventionalize this,
really good.
Yeah, most people go like, oh, the best is one that has the most views, right? And so then you go like, oh, well, Joe Rogan's the best, probably. I'm assuming he's kind of the biggest. If you kind of said, I was like, oh, well, maybe the best is the one that creates the most deal flow. So like 20 BCHQs, like another like sort of content online. They don't have heaps of listeners relative to Joe Rogan, but I guarantee you they get really good deal flow. So I think for you, like best is figuring out what the objective is, which brings us right back to how we started, which is, do you have the discipline to set a goal right at the beginning, do reps towards that, and then reflect honestly on whether or not you've achieved the goal?
That's probably going to be my biggest takeaway, is get clarity around what success looks like, and then, like you said, do the execution and reflect on it.
It comes into this idea of objective-oriented thinking, right? And like, to put it bluntly, if you're in a professional context, it's like if you're thinking about anything, generally speaking, it should be about how to move towards a goal. So if you haven't thought about what the goal is, then what's the hell and all the purpose and the rest of the thinking, right? And so objective-oriented thinking, in my perspective, almost all things just start by figuring out what you're trying to achieve. And to be clear, it doesn't like a lot of organizations, and especially founders, kind of become successful almost like serendipitously, like, navigating their way, but along that journey, there's still a lot of like conscious or unconscious ideas like, oh, well, could I build this thing for that? Okay, my goal is to build this thing for that. Can I build this thing, right? So there's still some objective, there. But I think if you're trying to make it more conscious and structured, coming back to your question, it's like, well, what do the best podcasts do? Or what is the best podcast? Well, let's just substitute, the word best for whatever your goal is. So what's the most listened to podcast? What's the highest rated podcast? What's the podcast that generates the most deal flow, et cetera, et cetera? Because you can't compete on everything, right? And if you want to compete on most views, you probably won't get most X, Y, Z, whatever your other goal is, right? So you got to get really, really refined about that in advance.
Would you have one refined outcome, or could you have a couple in that?
No, normally it's one or two. It's like just as an example, like we're typically working with management teams if we're doing strategic planning, and strategic planning effectively is a process of making your investment decisions. If you want to think about it in a kind of mundane way, for those people, I'm very often saying, well, what are the three main things that you need to achieve here? Based off those three main things, what are 2 or 3 ways of measuring each of those? So, like for example, let's say like I want to launch my company into the UK. It's like, well, I'm going to kind of measure if that was successful based on your kind of customer acquisition, revenue growth and margin, for example. And it's like, okay, well then what investments do we have to make to achieve those things? This is kind of basic, like strategic planning, but that mental model applies to anything, even if it's the podcast thing. It's like, well, what are we trying to achieve here? How will we measure if we have achieved that? And then based off that, what do we want to invest our time and money into?
That was phenomenal. Mate, my last question for you is, I know when we did our first podcast, you not steered away, but you had an evolved perspective on vision, mission, and positioning statement, so to speak. You were like, instead of that, I focus more on purpose, I forget the middle one, and then goal. Yeah. What's your kind of purpose now as you've progressed through your journey? What would you say your purpose is here?
Yeah, I have recently kind of refined, gotten more refined here. I think the two things for me are, so on the one end, like, I want to accumulate wealth, and in doing so, I want to have fun, and learn more doing that. So that's kind of one bucket. And then the other bucket is like, I really want to be able to, I guess in some regards, transfer or kind of provide my knowledge and experience to other people so that they can benefit from it. Because for me specifically, when I reflect on my journey very early on in my career, I was in an area where there was no one doing the stuff that I was doing. No one really understood kind of even why I was doing that. It was I stood out as a bit weird, in that environment, and was repeatedly reminded that I was weird, for doing that. When at the time, really, it was just I was trying to do things that are very normal. I'm just not normal in that environment. And so for me, if I was able to get access to some of the knowledge that I've accumulated now from someone, and like that would have been very valuable to me, not just practically on a day-to-day basis, but actually like emotionally. It would have been really, really nice to have the experience like, oh, like all these things I'm experiencing are not wrong. It's not wrong to think that, maybe I have to let an employee go. It's not wrong to, think about things entirely different. Maybe there's some value in that difference, but instead my experience was very much like, oh, that's strange. Don't do that. Like, you're wrong. And that's very hard to deal with, especially when you're, 20 years old.
Yeah. Mate, thank you so much. What would be your question to pass on to our next guest?
Who's your guest? Can you tell me?
Can't. We'll do it without telling you, and then we'll tell you the next time.
I think for me, like general broad sweeping statement, I guess, for assuming it's like business people like that you're talking to. What's the one incredibly important detail that you learnt about what you do that no one else knows that you think is incredibly valuable?
And then I'll get you to answer that question.
I think everything works like a machine. That's been my discovery. Like, everything works like a machine. And I think accepting that as an idea allows you to figure out then kind of how to build the machine. But most people don't want to accept that things are machines. So like, for example, a business is a machine, like teams are machines, but most people don't like to think about it that way. But I think when I got close to understanding that idea and then was able to kind of say, well, like if this was a machine, like how would it work and how would I design it? To me, that was a really 10x idea because it removes a lot of the emotion, from things and allowed me to kind of see things as like component parts.
Tobi Pearce, thank you so much.
Thanks, guys.